Good evening. The markets are very volatile. In certain days, it's moving up and down. But what has been happening in the equity mutual fund space is very interesting. From March lows, the index has reached almost twice its position. Then everything ought to be hunky dory. And then equity mutual fund investments must be at a record high. But this is not what is happening. And there seems to be some problem in the garden of paradise as far as equity mutual funds are concerned. Let's take a look. But before that, they need to do the following: hit the like button of my video and comment more so that we can engage with you better. Second, press the subscribe button of my channel and persuade your friends and relatives to do so. And finally, turn on the bell notification so that you receive every video. Welcome back to BJH. In spite of the markets being doubled from its lows, but in equity mutual funds have not done well. Of 35 mutual funds in the large cap space, 27 of them are trailing the index. It's very difficult to point out which sector will do well. The major problem seems to be that the indices are rotating from one sector to the other sector, and large cap funds are not in a position to change their stocks in such frequency because the friction costs would kill them. Most large cap stock funds are overweight on financial sector, and the financial sector seems to be out of favor within the Nifty block now. So this has meant that equity mutual funds have underperformed the market by and large. So, over the last 8 months, investors, especially retail investors, have been continuously withdrawing money from equity investments through mutual funds and trying to trade the market directly through online apps such as Zerodha and Upstock. This is akin to gambling. Most of the withdrawals from funds have come from multi cap funds. When the market is moving in one direction, and at sometimes illogically, it is very difficult for fund managers to keep up with the markets, and there will be a sense of underperformance. Not only is this the case, then there is another problem of overvaluations or stretch valuations. Normally, markets are considered fairly valued around 20 times earnings. If the company is growing really fast, then a higher earnings is justified and can be given a higher multiple of 30 to 35 times earnings. Your company has to consistently grow over 30% for the next 20 years for it to be valued at 40-45 times earnings. Today, the index is oscillating between 38 to 40 times earnings. This means that earnings of the index components must be growing at well in excess of 30% per year. That is not true, and still earnings are declining. In the latest EPS of the Nifty is at 370 or slightly lower than that. This is still below the pre pandemic level. The pre pandemic level indices were at 405 to 415. This means as the year comes to a close, there has been a net reduction in EPS, which no one is penciled in because of the pandemic's unexpected shock. These kind of unexpected shocks happens once in a generation and create a lot of problems. But the market has managed to paper over all its concerns and continue to go stay elevated because of the simple reason is the amount of liquidity. Central banks all over the world have pumped in huge liquidity into the system and hoping that banks in turns would lend it to those who really does need the money. But what has happened is the money has leaked and found its way into all asset classes, and stock prices are in stratosphere and continuing to grow. Retail investors have become very nervous and are withdrawing money from their mutual funds position. It is believed that more than 35,000 crores of money has gone out of the Indian equity market back to retail investors' accounts over the last 8 months. For 8 months, there have been regular withdrawals from mutual funds, which has never happened since 1991. It's not only mutual funds money are being withdrawn, it's also money from the liquid funds and other debt class is also being withdrawn because the debt funds had a great time run till interest rates were cut. But now, with inflation rearing its ugly head, not only in India, across the globe, bond yields have spiked, prices of bonds have fallen, and thus debt market funds are showing negative returns. This, in turn, will mean that interest rates will have to rise at some time during the year. When interest rates rise, profits will get impacted and prices of stocks will come down as the gravitational force comes into play. This would mean lower earnings and lower stock prices. As Charlie Munger famously warned now in recent times, that the next decade for stock investing is definitely going to be poorer than what it was in this generation, simply because future profits have already been discounted in the current rally, and it will be extremely difficult for companies to generate 30 to 40% of growth in profits month on month. The pandemic might have receded in India, but certain parts of the world, the pandemic is still very strong. Today, in Business Standard, an article said nearly 65% of India's workforce in the organic sector felt financially constrained. This means that they have either lost their job or they are in their job with no significant prospects of an increase in salary. And this means that consumption is set to come down, and whatever little consumption is there is going to come from wealthy people and from people who can afford to splurge the money. But products and brands that depend on mass consumption will take a big hit this year. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. உங்களுக்கு ஏதாவது கமெண்ட்ஸ் இருந்தால் டெஃபினட்டாக கமெண்ட்ஸ் போடுங்க. நீங்கள் மோர் கமெண்ட் போட போட தான் நான் எது மாதிரி கண்டென்ட் கொடுக்கணும்னு எனக்கு தெரியும். நன்றி, வணக்கம்.